The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everyone. Basil Chapman sitting for Tommy O'Brien at the last minute. Tommy just couldn't make it, and I'm sitting in. So this is the last trading day of 2024, December the 31st. It's been a pretty good year. No complaints. Complaints about human error. There are moments where the human part gets in the way of technical trading, but that's just the way it is. Now, most importantly, what we're looking at, here's the monthly chart of the Dow. So from 2024, and this is taken from right there, that's January of 2024, where the Dow was around about 37 to 38,000. We are now trading at 42,573, having hit 45,073. Right now, the futures are up 87. Let's go to the S&P cash. The S&P, well, right now the futures are up 14, but the cash had this pattern that I call the dreaded H pattern. It's an arching over. Let me just put this in right here. So as a morning market kickoff, we're also looking at end of year countdown. And then January the 1st is tomorrow. Happy New Year to everyone. May be a rewarding, happy, and successful year. And what we'll be looking at is, and I'm anticipating choppy action. I'm seeing upside kind of limited. At this particular point, I'm also looking at the downside fairly limited. So it's really it's a trading range that could expand a little bit. We've got maybe 60-40 to 60-60 on the upside. The all-time high is 6099.97 in the S&P. But this H pattern says, yep, we could even get an arch that makes a lowercase m formation with a second arch formation, unless we take out 5832 in the next 6 trading days. That'll be the dreaded H pattern. That'll start to impact the weekly chart. So far, the weekly charts are still pretty good. Let's go to the QQQ, which is the Index 100 trading vehicle. Same thing, arching over, hit the Chapman wave inside. Okay, this is the falling axe formation with an inside track repellent line right there. And it's just kind of arching over right now. The future's up 157. Now the QQQ Invesco Trust Series is up $1.51 at 517.412. Holding okay, a break under 5, I'd say break under 508 really sets up the weekly chart to start deteriorating, and so far it's holding really well. Leg D in the monthly chart. The S&P monthly chart, what is it in the Chapman wave methodology? A leg F. We're always looking, let me just see if I can get this real quickly, since some of you are probably new to my work. Here we go. No, that's not the one. Here it is. And it's not even that one. It's this one here. There we go. So I try to identify the lowest low bar, then count each successively higher peak. Look, I even do that in the 1-minute chart or the E-mini. It doesn't matter if it's monthly, daily. Look, this one did a beautiful peak D in the 10-minute chart, right at the resistance of the 200-period moving average. This is the March E-mini contract. So let's go back and see whether this applies. Look. There it is. It went to an E in the weekly chart, and it's pulling back, still with very good technicals. It went to a D. The objective in the Chapman wave is to go from a low bar, count each successively higher peak, A, B, C, D, E, F, G. That's on the way up, and it's A, B, C, D, E, F, G on the way down. But it's at D. It's the upgrade of a buy signal to a buy mode, saying that there should be at least a D. And remember, the Dow, for the first time at an all-time high, went to a C. It failed to make that D. There's no other way I could count it. It's just so unusual. There is still an opportunity to do that, but it hasn't done it yet. So if you get an upgrade to a buy mode, it means that it means that the price that you're following should go to at least a D. It can go all the way to E, F, and G. There's never an H. At D, other things can happen. Just a real brief synopsis, and here we are. D in the daily chart of the S&P. So far, peak E in the weekly chart, and a leg F with it. It gets a little complicated because this is a Chapman wave instant restart. So this is an F, maybe an F/C. So far, all the technicals in the monthly chart are still very strong. Weekly chart, the 9-period moving average over the 14 is the best one. The MACD is weakening. The stochastics under 80%. The on-balance volume is pulling back. All right, with that said, have a look at this chart. QQQ. This is the NDX 100 trading vehicle, made a peak F top. Now, I also look at, for topping signals, I look at round numbers. And when I start to see round numbers either at a bottom or a top, I say, all right, you got to be careful. Well, the QQQ, that's the Index 100 trading vehicle, which has all the mega stocks as well. 539.15 was the all-time high. The same day that it did that on the 16th of December, it hit a 533 round number high. It's way below that. It's at 517.34. So I have to say, and I haven't yet been able to give a signal to say that there's anything more than a potential sell signal, but it hasn't been upgraded or anything like that. And the weekly chart is still strong. So I'm looking at residual strength still excellent in these indexes. Now, this is different. The IWM really has gone to a sell mode in the daily chart. It had a double top in the 244 area. 2021 November, that was the high. 244.46 comes all the way down to 161.47 October 2023. Rallies all the way back to within $1, less than $1 of the all-time high of 2021. It goes on 25th of November. It goes where? To 244.98. Now it's had quite a bit of a pullback. The daily chart is in a sell mode. The weekly chart is not yet in a sell signal. I have to wait for Friday's close because the weekly chart. Monthly chart has made a peak D. There's no way it's going today up to 244.99 to extend leg D. So that's going to be a peak D. And the technicals are still pretty strong. Look at this. Stochastics at 86%. I love over 80%. MACD is good. On-balance volume is a little bit weak. 9 is way over the 14. I see this as a consolidation so far, and there's no other way I can think of it. And we've been prepared for that for a while for subscribers to my opening call newsletter. We've been building up some cash. We've got positions much lower down and some very nice well-acting indices and stocks. I just don't want to mess with that, so we're being a little cautious here. So that's the IWM. Look at the SMHs. The SMH is a semiconductor. Basically, look at this weekly chart, a sideways consolidation with the 9-period moving average still above the 14, but getting close to turning down. I'm watching it closely. Monthly chart, same thing, peak D. Peak D in the weekly chart. Remember, the fourth highest peak D. That's where other things can happen in the Chapman wave methodology. Most recent high was a peak D in the SMIs in the daily chart, but there was a major peak D right here. Did I forget to put in? Why did I forget to put in the top? There was a Chapman wave 2-bar reverse. Oh, there it is. 262.26 back in mid-October with a 2-bar reversal, and we pulled back. So with that said, I'm looking at this as a consolidation. I'm not looking at this as a major top. Yeah, it could change, but as we're speaking right now at 9:14 a.m. Eastern Time on the very last day of December 2024, I'm sitting here for Tommy O'Brien, just couldn't make it.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Yes, the questions came in about gold. I'm getting to gold right now. So I'm looking at the SMHs. They're up 99 cents pre-market at 245.55. Just sideways action, just a trading band. So all I can say is that if you look at NVIDIA has been weak, had a little bit of a bounce. It's up $1.11 today at 138.60 pre-market. A 9-period moving average in the weekly chart is holding pretty well. Monthly chart, peak E. We can't see any new high today, so that's a peak E in the monthly. NVIDIA semiconductor GPU accelerated computing. In the weekly, peak E, and the daily is at 152.89, most recent high, 21st of November. But wait a minute. AVGO is Broadcom. I wish they kept the BRCM symbol. Had a couple of round numbers, 240 and 245, had an all-time high of 251.88 on the 16th of December. A lot of tops were made on the 16th. And now it's trading pre-market at 236.00, round number, but that's just pre-market. Anything can happen there. But at 245, last round number, it's at 236. So it's still underneath the previous high. So I'm looking at this and I'm saying, yeah, digestive phase. Why not have a digestive? It's been one of the look at this monthly chart. It is spectacular, going from the 150s to the 250s. I mean, 100 points, not bad, huh? All right, so let's just go on to a permanent error. Oh man, did I do something wrong? So I don't know if, yeah. Oh, I'm just checking something wrong. At gmail.com. Oh, I have to go through this again. I got an email from a new subscriber saying he has subscribed and he's just having trouble getting online. And I just sent him my newsletter. And all I can say is, I don't know what's going on. I just got a text from him. No, I got a text just saying it didn't go through. So that's unusual. All right, so, okay. I'll deal with that in a moment when we get a break. Meantime, back at the ranch, I wanted to show you something very interesting. Look, gold. Gold has been so choppy, made a fantastic move. There's an article, I don't have it in front of me. I'll try to get it in the break. On the latest Stocks and Commodities magazine. And I've been getting this magazine for 20, 30, I don't know how many years. And I have to tell you, I've never seen anybody grading peaks like I do, peak A, peak B, peak C. Peak D is the objective. It can go higher. What happens? I've never seen it. It's just, I've got a plethora of techniques that I've developed that, in many ways are proprietary. Even the round numbers that I talk about since 1987, I've been talking about round numbers since the low of October the 19th of 1987, when I said, with all the round numbers that I've been monitoring, this should be the low, and within 18 months, we should be making all-time highs. And that's exactly what happened. So those round numbers are very important. So let me go on. So gold is just down in the doldrums. It isn't doing much. It had a fantastic move, and it was the second best compared to the NASDAQ going into about 3/4 of the year when this article was written. And now it's pulled back. But if you look at the monthly chart, peak C, it should still make a peak D. All I can say is the technicals are still all pretty good. Even the stochastics at 89%. Yes, the weekly's turned down. The 9-period moving average is so close to turning negative. And that says it might take out the 250, the continuous contract, 250, 2565 low of a few months ago. But wait a minute. It's just holding steady. If you look at the silver, same thing, holding steady. It's been weakening. It's got the dreaded H pattern, means the lowercase h comes straight down, tries to rally, fails at a peak A or B, takes out the left side low. Got to monitor that. And in this particular period, because there is some uncertainty, you would expect that gold would be rallying, but so far it hasn't. Now what we're looking at is the GDX doesn't really comport with what we're looking at in the gold and the silver contract. The GDX, which is the gold miners, is much weaker. It looks like it wants to hit the 32 200-period moving average. It's at 33.77 right now. Now, we have a gold stock. It's still holding okay. It's still just barely positive. I've tried to be as positive as I could with this. I'm tightening up the stop. I'm not messing around. We've had some really good trades. I don't want any messing around trades. So if it fails, it's the gold. And all I can say is I'm watching it closely. But look at silver, SLV. Look at that. Also about to test the left side low at 26.23, down 20 cents. Not doing that well in the daily, weekly. Monthly still looks pretty good. Okay, let's go to high-grade copper. High-grade copper has been terrible. Oh, it's even worse than terrible today. It's gone way underneath the 200-period moving average of the weekly chart. That's not a good sign. That's what's making me kind of nervous here. I'm going to do that in my show. I'll talk more about it. I'll do some of it now. And that is talking about the deep cyclicals, like a caterpillar. Look, Caterpillar made an all-time high. It made an all-time high back in November. It went to 418.58. Should have put that in. 418.58. 418.58. And here it is at 363. Well, that's a problem. You've got SLX, which is the steel ETF, way down at lows, yearly lows, in fact. To me, this is an issue. There's a huge divergence. And yet you got the IYT, this is the transportation index, making an all-time high in November at 75.59. And here it is at 67.64 at the 200-period moving average. So there is a divergence. You can't just have the high-tech or the tech sector generally making all-time highs and doing so well, and yet the general market is starting. The generals can't lead without the troops, and that's the way I'm looking at this. I'm saying that's why we become quite cautious. If you look at Bitcoin, Bitcoin has pulled back sharply. It's up today 1,600 at 96,555. We still remain long. We're taking a little bits off because that's money management. 110,180 was the all-time high on the 17th of December. Look at that pullback. A 9-period moving average daily has weakened. All the technicals are weak. Stochastics at 18%. Weekly chart looks great. MACD is good. Stochastics still, just under 80% at 79.73. On balance volume is down, but look at the 9-period moving average, way above the 40. It'll have to go under 80,000 for the green 9-period moving average in the weekly chart to go negative. And look at the monthly chart. At a D, I suspect that we're in a consolidation phase for Bitcoin, and that I've been talking about this, saying in the den. Anyone remember that from 3 days ago? Look at Hollow, HOHOLO. This is in the den post. Wow, look at that. Up 49 cents at 6.90, up 7.6%. Oh, good eye. Very good. Another one, Dan. Very good. Mr. Good Eye. All right, I'll be back in a moment. Basil Chapman sitting for Tommy O'Brien. The futures are up. The Dow futures up 100.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. We're back, and I don't know whether I did that correctly, whether I sent it to the, I was sending my newsletter to someone who just had a little trouble trying to get this today. So the S&P futures are now up 50. Look at those peak Ds. Remember the fourth highest peak Ds where other things can happen? There's your peak D in the 10-minute chart of the E-mini. Here's the 10-minute chart, the 5-minute chart peak D, and it turns out the peak D and the 1-minute chart. I do expect some kind of a rally today. Just a kind of an oversold, a kind of a celebration of the year, which has been really good for the general market, but not for specific areas. I've been through some of those, and I'll go through some of them again. So someone in the Dan mentioned Holo, H-O-L-O, which is micro something or other, micro cloud. Whoa, it ain't micro right now. It's gone up 9%. And it was tootling along in the ones just 4 sessions ago, and here it is in the 6.90. That's fantastic. Okay, so let's get back to some of the things that we want to look at here. So the dollar. The dollar has had a really good year, just in terms of going to a higher high. It's a multi-year high. Going 2022, it was in this candle right here, was up in this area. It's at 108.21, up 17 ticks, having a high-level consolidation. I watch these very closely because very often they take time. It's a kind of a distribution channel, sideways channel, rectangle formation, and then it takes out the low. You've got to be careful, but it hasn't so far. On the weekly chart, still very good at peak B. But peak B underneath the all-time high of 114.78 back in September of 22 at a peak F, and it pulls back, and now it's gone sideways. And this is the second month that the candle has gone above the arch high. That's my rule of thumb with these H to M patterns. And look at this. The high that was made at 107, I think it was 107.35 back in October of 2023. We did last month pop above it to the 107s, and now we've gone to the 108s. But this is the first month that it looks like it's going to close above that left side high of 100, what did I just say, 107.35 or so, and it's at 188.22. If it can have another, out of 3 months, if 2 months it can close above that, it usually portends a higher high to come. So that's the dollar. Look at the EUR-USD. EUR-USD making that H pattern. It's done it once at a peak C, and it's pulling back. Hasn't taken out yet the second time. Most importantly, look at the way it's the weekly chart, the 9-period moving average, the pink 9 under the 14 is so wide, and the MACD is the same thing, and the stochastic's flat at 13%. That's just suggesting that the dollar has some more strength. USD JPY usually goes in tandem in the direction, not necessarily the same percentage, but the same direction as the dollar, and it is. Look. Peak E and it's pulled back, but the 9 is over the 9-period moving average in the daily. 9's way over the 14. MACD is good. Stochastic's very strong at 89%. And lo and behold, you've got a leg B. Well, the week has still got a few days to go. A leg B in the weekly chart and a leg peak E, and it's trying to get back to that high. That's the U.S. dollar, Japanese yen. Oh, I just wanted to see what happened here. I had a feeling that there were going to be some trades that I could have put on. But let's go one step at a time. Yes. So nice big spike, pulls back. I do see residual strength because that extra sell-off yesterday going from 245, minus 245 in the Dow, down to that minus 400, was it 30 or something? And that looked to me like just give up. I'm done and I'm selling. And that to me looked like that 130 points should be given back to the upside. And the Dow is up 156 right now. And the S&P's up 20 points, and that's good. Kind of choppy. There's a very mixed market here. And I also want you to have a look at, let's see, so we've done that. Done the currencies. I want you to see the bonds. This is the thing that worries me the most. Up 930. Oh, I didn't want to do it here. I want you to do it in the daily, weekly, monthly charts. So let's go right here. There we go. So the bonds trading up 10-30 seconds at 114 and 13-30 seconds. Yeah. All I can say, I think you can see it better in the TLT. Most of you can go to the TLT. You don't all get the futures. So let's go to the TLT, which is the iShares 20-year Treasury Bond ETF. They went to a trough C, and we've actually got a leg B. Well, we haven't had a leg B in this particular ETF for quite a while. So that's a peak A. That's a leg B. Remember, it's a leg until it makes a peak. So that's an uppercase on the way up. So that's a gray B, meaning that all the technicals are still very weak, so you can't get a buy signal yet. But it does say that it's trying within my rule of thumb in this arch formation or this pyramid formation. If the left side low is taken out, and look, the time sequence says that last week was the time, to this week actually. And if it gets taken out of 87.34, the low that was made back, I think it was in May or June of this year, it's got, within 2 weeks, it's got to close above. And lo and behold, it's above, and it's only Tuesday, so we can't call it a close above, but the low of 87.34 was taken out because it went to 86.98 last week. And this is the TLT. So this is really important. All the technicals are pretty gross. They're terrible. TBT on the way up has gone to a peak C. It could call it a C1, C2, and it's pulling back a little bit. That's a good sign. That's yields. This is really the yields, the ultra short limit 20-year Treasury Bond ETF. So, and it's gone to a peak B, a leg B, in the weekly chart. All right, so we're watching this. If the yields can really start to come down, I think that takes away some of the pressure. There's not everything, because if you look at the HGX, there it is, HGX. This is the Philadelphia Housing Sector Index, peak F, Chapman wave 2-bar reversal in the monthly chart, peak D in the weekly chart, and a peak D in the daily chart in the last rally. It's the second peak D. The first one was right here. On the 18th of October, it went to 837.18, pulls back sharply to the 740s, comes all the way back to 830, just underneath the previous high. It goes to 836.67 at a peak D, and that's in a sell mode as well. There, okay. Oh, I think this is such a mixed market. So I was talking about, you cannot, now let me just do this. So let's go to Mega. Mega, M-E-G-A, M-E-G-A. Wait, M-A, Mega. Oh, Meta. It's been a long day already. I've been up since before 6 o'clock. All right, -1 at 590. It went to a peak C all-time high. Oh, down. Don't tell me this is going to pull a Dow. They make a top at a peak C. Well, there could be a C1 and a C2. The Dow didn't do that at all. So Meta went to an all-time high on the 11th of December at 638.40. I'm looking for any round number. No. Oh, 621 open. Oh, right there, the day that it smashed to the downside.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
If I can send it again. Here it goes. Okay. So what we're looking at here is the sharp pullback in the EMA. You see how important these peak Ds, you see how important the 200 period moving average repellent line is. And look what we've done. We've pulled back quite sharply. Dow's still up 83. S&P is only now up 4.72. This is a real struggle, and I'm considering that the struggle goes on for about another 2-3 weeks, maybe. I mean, the inauguration shouldn't make a change within minutes, but you never know. But I'm anticipating that it's choppy in a narrow trading, not narrow, but a trading band. That's really what I'm saying. And that's kind of summing up what I'm looking at for market exposure. And that just says that long positions that you've got really good gains in, take something off. I'm just turning around to see, did I get that right? Okay. So I did send that. I don't know. We'll have to figure it out a little later on, and I suspect that TFNN will get that organized. Thank you. Okay, so Meta makes the dreaded H. What's the dreaded H pattern? Well, in my work, there are certain patterns that I look at all the time, and here is one that, yeah. I look at these three. This page here has 3 examples. Straight line up, straight line down, number 1. Cup formation, number 2. Arch formation, number 3. A mix of 1 and 2 and 1 and 3. Look, here's 1 and 3, called the dreaded H. Because if this arch fails at a peak A or a B and it takes out that left side low, be careful. You can go a lot lower. Look, it failed there. This is the matter. After that 638.40 high, it pulls back, then bounces to the 632-ish level, turns around and pulls back sharply. Also had a 621 round number open. Oh, I should take this. I'm going to take it. Hello? Oh, I missed it. Oh, I'm going to try my cell phone, I guess. So I'm waiting for a call. I have to have this. I've got expecting a work on the house. Okay, hold on. Okay. Hello? All right. Sorry about that. I just had to take that call because there was someone with an appointment that was coming over. So these three patterns. So this H pattern, if it fails, can go quite deep. On the right side, when you take out the reverse green Y, you take out that left side high, you can go quite a bit higher. Well, look at this. You've got another arch formation. That's happening in Meta. It's happening in Tesla. Look, Tesla, it's actually today just took it out. In fact, yesterday we were going to go short Tesla, and I thought, I just don't want to have this on my head here. Anything can happen with Tesla at any point, and it would only be a 1-to-1. A 3-to-1, I'd say let's take a chance because you can always just, you can, in this case, lower your stop. It would be lower, high, raise your stop because you'll be going the inverse, TSLS. And but it's 1-to-1. So I didn't do anything. But here it is. It's starting to fail. And I think Tesla's going to be pulling back quite a bit. Have a look at Bitcoin. We did the same thing with Bitcoin, BTC. Look at Bitcoin. Did the dreaded H, took it out yesterday on the left. Now it's having a good bounce to the right. And that's what I say. This pattern within 3 sessions, 2 sessions, I usually say maybe 3, but I usually say 2 sessions, needs to close well above the left side high to say, hey, now it could test the high that was made, the previous arch high, and that's going to be the big test of strength. All right, with that said, look at this. Amazon, round number, all-time high, round number 233 at the exact top. And where is it today? 221.65, up 35 cents. Made the dreaded H, taken it out, but it has closed above it, so we're going to be monitoring that. Let's go to Apple. Apple was a slightly different pattern up until, look, there's the weekly chart, leg D. Let's do this. Leg D. Hey, why aren't you coming on strong here? Control R. There it is. Made a peak F at 260.19 4 sessions ago. I'm watching this closely because all the technicals are still very good in terms of the price and the 914, but the MACD has just turned down. The relative strength has just turned down. The MACD has gone under 80% at 73. On balance, volume is still good. So I'm looking to see, are there any round numbers here? Just as clues to say some people are just throwing in the towel or trying to buy it desperately. No, I don't see anything yet. But you see these 2 doji candles? Small candles are saying, hey, some of that upside momentum is starting to lag. Oh, talk about that. I was looking at, I'm not going to be able to go back to it, so I won't. Now, look at this. Look at the way we've come up from this pullback. And that's what I'm saying. I see residual strength today, just kind of as a celebration of the coming new year and the wonderful year that most of the indices have had at certain parts, some going all the way through until the last month, December. And that's just kind of what we're looking at right now. That 200-period moving average of 59.79 in the E-mini 10-minute chart, that's going to be the big thing to watch in the next hour and a half. So now let me go to Apple, Netflix, and NFLX. Netflix made a 941.75 all-time high on the 11th of December, pulls back, and in the interim has had a whole bunch of round numbers, many at 915, and now it's trading at 897. So I'm monitoring these things very closely, but the weekly charts are all saying, wait a minute, this so far looks like just a reasonable digester phase. It could even see some of these stocks go a little lower, but the weekly charts are still very, very good. Microsoft trading down since the 456.16 last high. The all-time high was 468.35 in July of this year, plummets to 385. Has a really good stair-step move up to the 456 level, peak D in the daily, only a C in the weekly, and a peak E has been made at 456.16 in the monthly chart, and it's digesting gains. It's just not breaking down. It looks like the semiconductors in the sense that is within a trading band, still not doing very much. Okay, so I've wanted to do those things. I had a couple of questions that I now have to get to right away. Basil, have a look at crude oil. You mentioned yesterday it was doing well with natural gas. So today crude oil is up again. It's up 33 cents at 71.33. I like what I'm seeing. I haven't yet decided whether this is a move that has substance. USO is the United States Oil Fund. Wait, why have I lost my notation for the USO? Anyway, it doesn't matter. USO is at 75.04, up 21 cents. So is this a case for Schlumberger and some of the oil service area? Schlumberger trading right now up 19 cents at 38, around number 38. I'm looking at them very closely because, Rig is in that area. Rig is the, right here is trading at 371, up 4 cents. Rig is the, there it is, Transocean Limited Offshore Drilling, Oil and Natural Gas. And let's just look at natural gas as we go to a break. NG trading down 18 cents. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hello, so just to sum up before we go to the break, this is Basil Chapman sitting in for Tommy O'Brien. Tommy apologizes, couldn't make it suddenly at the very last minute. I'm sitting in, and he wishes you all a very happy New Year. So do I. I'll be coming up for my Tiger Technicians Hour in a moment, and my service is the opening call newsletter. So natural gas has had a big move up, taking a little bit of a digestive phase. What I'm looking at for the next 2-3 weeks is to be able to set in place some positions that should hopefully last at least the first quarter. That's what I'm looking for. I don't know if it's going to work, but that's really the objective. There's an opportunity. We've raised cash. We're looking for these opportunities. You can see the market now. The Dow is up 98. The S&P is up 10, struggling quite a bit. This is a digestive phase, as I see it, especially based on those weekly charts. Meantime, back at the ranch, let me just do this quickly. The volatility index. And I'll be going through a lot of stocks in my show coming up. I'm going to go through Dow stocks, NASDAQ stocks, small caps. And meantime, look at the volatility index, down 28 cents and 17.12. All I can say is that as long as the volatility doesn't hold in the 20s, we should be seeing we can see some rallies, and we can also see some good support. And I think we're stuck in a trading band. Lowercase h goes to a lowercase m. And until it breaks down, that's kind of what I'm looking at. So I'm going to just get ready to wrap it up in a moment. One other stock I wanted to look at here. You see CTAS. It's one that I've looked at for years, decades. Cintas Corporation, Uniforms Rentals, that had a big pullback. I think we were already looking at some kind of economic weakness. It's going to be showing up sometime soon. And that's why I think that the yields are going to sometime soon start to come down. Although I think overall they're going to be higher. But I think they should be coming down. Look, Cintas and URI, which is the United Rentals, another big market indicator for me. Look at the big pullback it's had in the monthly chart. Well, with that said, have a happy new year, everyone. I'll be back in a moment for my Tiger Technicians Hour. And let's make it a great one. We wanted to put money to work. As I say to subscribers, we've built up some cash, maybe back into some of the positions we've taken a little bit off.